Live.
Hi, good afternoon, everyone. I'm Darren over here from Warrants, and today I'm very glad to be speaking together with Conhao, an HSTECH trader and investment expert, to actually share with you the views in the global markets, and as well also find out what this leverage tool that you have seen in the start of in the title, and find out how we can use them to capitalize on the gains in the current market. So before we can begin, I'll actually introduce Conhao and hand it over to him to actually share what will he be covering in the next hour.
All right, thanks, Darren. I think time is very short. This segment I have is 10 minutes. Then after that, followed by Darren. I'll pass back to Darren for 5 minutes. Then I will talk about the market outlook for the next 15 minutes. Then after that, Darren will take back again for the next 15 minutes, and the rest of the session will be Q&A. So I think for the first segment, I'll be talking more about strategies. Strategies. Then on the next segment, I'll be talking about market outlook. So this is within the next 1 hour. Just a very quick introduction about myself. In the industry unknowingly for 25 years, just amazing. So I studied engineering, but never practiced that. And after I finish my studies, I go straight to the trading floor. And in this career for 17 years, until about 7 years ago, I decided to spend a bit more time for my own investment and own trades. So I decided to, that was after Lehman crisis. I'll continue to stay in this industry, sorry, for the next 3 to 4 years. But then there's a lot of paperwork involved, so I decided to exit the industry, and I want to spend more time for my own investment portfolio. And it was also very fortunate back then, about 7 years ago, various exchanges, SGX, Chicago Mercantile Exchange, that we've been working together. That are very honored that always receive invitation from them to design education programs with them. Okay, I just want to run straight to my strategy part about what I know about trading. I do not just trade, I invest in long term. You can't imagine how long term that I have the portfolio. But in the same time, I also swing to the other end where I enjoy a lot on short term trading as well. So today, my focus will be on short term trading. And I'm very objective here is that structural warrant, how I apply structural warrant. But I'll be talking about the underlying market, the benchmark itself. Yeah, I'm watching my time at the same time, so I'm very cautious about the time. Now, let me just share my screen, my PowerPoint. Okay, just bear with me for a little while. Okay. So I hope you could see that. That's my first session. Okay. And the next first session I'll be covering about 10 minutes. Just before I go deeper into the strategies that it has for particularly to trading, disclaimer is important. What I will be sharing with you will be of my a view that I have full conviction on this view, but this view is for my own personal consumption. Just that very honored that this event, the Singapore Exchange and Investing Note, invited me to share on this, and I'll be happy to share as well. But if in the event that after this event, next Monday or next week or next month, you thought about what the strategy I share and market outlook they want to apply it personally, then you really have to consult your own professional licensed advisor to do that. Okay, if we're with that, then we're good to go. Now, on this segment for the next 8 minutes I have, I'm going to share with you some trading strategies that I have for specifically on the short-term trading. But these strategies you also apply in my long-term investment as well. So whether it's an investment or trading, the principle behind it is the same. Yeah, I'm going to repeat this again. Whether investment or trading, the principle behind it is the same, which I'm going to demonstrate to you right now. But the only difference about when it comes to investment, applying this strategy is this. For investment means about long term, I have to include the macro analysis. Macro analysis refers to the study of, sorry, I have to include the fundamental analysis, which include two things. Macro analysis, we study the economics, government policies, and also micro analysis, where we study into all this book value, P ratio, all this and that. But when it comes to short, the principle I will share with you shortly is the same, but usually for short-term trading, depending on how short it is, I do not quite include the fundamental analysis, which include macro and micro analysis. So I just want to get the point here. And if you're an investor, you're not a trader, I want you to feel a bit excited that it can be applied for longer term investment as well. Okay. Now, so what happened here is that whether you're investing or trading, you're buying short term or long term, the key is this. Now, the first key is that you have to identify the trend. Where's the trend right now? So you have to identify the main trend. The main trend right now is, say, for example, if you identify the main trend is up. Now, what is the strategy for short-term trading, for short-term trader, or you can apply for if you're a long-term investor as well? The key is this. Once you identify the main trend right now is still up. So therefore, you should do this. Wait for an opportunity to buy on this. Wait for an opportunity to buy. This means that whatever you're doing, first we have to identify where is it right now, the market. Is it showing us that it's pending uptrend? Is still the uptrend is confirmed as right now is on the way up. Or maybe the downtrend has set, now it's on the way down. Now let me just talk about the uptrend first. Now, if the uptrend is set that you study based on whatever study you have, that you confess uptrend. So therefore, the best strategy is to be patient, to wait for the dip or the retracement to come. The keyword is retracement. Once you confirm the uptrend is there, you wait for the retracement. As the retracement form, which is what we could observe here over the last 2 trading days in the US market, we got to keep track very closely. Now, first of all, we realize that the whole market is uptrend. Yes, the last 2 days the market has been dipping. That's called retracement, right? Now you got to eyeball very closely because your mandate is that the current market is still uptrend. Yes, the market may be correcting now, but in the next few days, I got to eyeball like a hawk for a precision entry. Okay, a precision entry later I'm going to share with you how it works in a short while. Now, so this is uptrend. Now, again, rule number 1 is that if you want to trade or even invest for long term, the principle is the same. Is that once you have identified the trend is up, what you could do is that you wait for a retracement to come. For example, this is uptrend, the retracement comes, the retracement. Okay? Or if you are here, the live market is here, you wait for the next few days or next few weeks or few months or the next few hours, depending on what time frame you're looking at. You always wait for retracement. But first of all, the first key is that I will have to identify where is the trend. Now, then the next key is that earlier I say that, well, while we have first identified the trend, number 2 is that we wait for retracement to come. Now, number 3 is that you will encourage that you get a little bit more deeper into the technical analysis, that you identify hammer or bullish engulfing body, those that have high weighting, where between me and Macquarie Warrant, Macquarie Bank, we produce a lot of YouTube. You can watch the channel there, that over the last 10 sessions we have, and most of them are pretty accurate. I'm quite pleased to work together with them. So I identified a lot about this precision entry, what hammer or what are the bullish engulfing body that we should read into them. There's a lot of hammer that appear all the time, but which one should we be selective and which one should we be taking closer look at because that hammer have a high weighting in that. Okay, so this is the trading strategy that I want to offer. Now, the next thing is this. Now, then the next key is that in an uptrend, now the objective is number 1, we have to identify where's the trend right now. If the trend is up, you don't jump into the market immediately. You wait for the retracement to come. When the retracement comes, then there will come a point that there is a precision entry. Say, for example, a high weighting hammer is one of them. Now, what if you ask me this question right now, say, hey, Kon Hao, what if in the uptrend, can we sell if we find that there's an opportunity right now that surface in the market? Can we sell in the uptrend? That means we oppose the market because current market is an uptrend, but can we take a selling view? The answer is yes as well, but you have to understand that if you want to sell, you're against the trend. Now, the against the trend is this. When you want to sell is against the trend means that now you notice that on the uptrend, the trend up subsequently or gradually is quite long haul. Means that on the uptrend, when you buy on dips, you can position it for a long-term position. Now, but on the uptrend, find selling opportunity, say for example like this, the inverted hammer or the inverse hammer, where I talked a lot over the last 1 whole year with Macquarie Warrant, that we strike a lot of jackpot point back then. That means we're quite accurate over the last 10 sessions that we have. Now, on uptrend, can we sell? Yes, we still can, but we still could, but we have to understand that we're against the trend. So therefore, when you sell a market that's on uptrend, you have to realize that usually this move is means that when you want to sell on an uptrend, you can do that, but you have to realize that you're against the trend. So therefore, the strategy is that you have to keep your position really short because you have to acknowledge, because we acknowledge that we are against the trend. But if we are with the trend, then there's a lot of strategy that we can do. It means that we can buy and hold a little bit longer. Along the way, we may want to accumulate because there's another ground retracement for us to take on the market. But outside against the trend, then we have to keep it really short term. Okay, so as I deliver, I keep my clock check. So now we're entering to the 9th minute, going to the 10th minute. So I would just want to pass this time back to Darren. Then after that, I will come back and I'll talk about my market outlook for the rest of 2021. Darren, it's your turn. Yeah.
Okay, thanks, Kon Hao. All right, so just give me a minute. I'll share my screen quickly. Okay, Kon Hao, can you see my screen?
Yes.
Okay, great. Okay, so good afternoon, everyone, again. And today, I want to thank Kon Hao for a good introduction and also sharing his views, especially of what we have done over the past 10 months, where we actually share some educational sessions on YouTube and teaching people how to point out the various entry points and how to capitalize these views with warrants. So in today's sessions, I'm just going to introduce you to this new product, probably new to you, which is called structured warrants, that has been in the market for around 15 to 16 years in Singapore and continues to be one of the most popular listed leverage products. But before I continue, I just want to have a little disclaimer that today's session is recorded and is solely for training and educational purposes. All right, so to begin, what is a warrant? Very simply, warrants have two types of warrants, a call warrant and a put warrant. So for call warrants, it's something when you're bullish, you feel that the value of your share or the index is going to go up, you buy a call warrant. Because as you can see in this little graph below on the left, you see that the underlying, which is in orange, and the call warrant is in yellow, actually moves together in the same direction. So this shows that when you buy it when you are bullish, because it moves together with the share. But if you feel that you are bearish and you feel that market's going to come off like the orange line over here on the right, this actually shows that markets are going down and the put warrant will actually move in an inverse relationship, and therefore it's something that you can buy when you are planning to short the market. A very familiar term that you often hear people on shorting, when you buy when the stock comes off. Okay, and as to why warrants have continued to be one of the most popular products, I'm just going to quote a few of the very commonly known terms that may interest you. So first of all, it's the liquidity. So what is liquidity? Liquidity is getting in and out of the market easily. And when it comes to warrants, because warrants are listed on the HSTECH and issued by a market maker. So the point of the market maker is to provide constant bid and ask price and volumes. And that's why, as an investor, you'll be able to enter and exit your position easily. Second of all, also because it's listed on the HSTECH, you have live prices and transparency throughout the trading session. And third, which is the most exciting feature, is gearing. Gearing is also another word for leverage, where what it does, it magnifies your returns. So I'll just explain with a little this chart, this table below. Just at the start of this year, from at the last day of last year to 25th of January, you notice the changes in the 10-cent share and the 10-cent call. So do you see in this around 3 weeks time frame, you see the 10-cent share has gained 36%. But whereas the 10-cent call has gained 327%. So this is the effective gearing of 9 times. Because if you look at the difference between the percentage changes, it's around 9 times more than the 10-cent share. So this is the reason why people look at gearing, because of the leverage it offers. And Macquarie Warrants, we're proud to say that we offer the highest leverage amongst listed leverage products in Singapore, between 3 to 20 times. And last of all, it's low pricing. So you see the price of the 10-cent share, it's around Hong Kong dollars, 500 Hong Kong dollars to 700 Hong Kong dollars, opposed to the 10-cent call warrant, which is only 8 cents to 35 cents. So what this means is that you can gain an exposure to an underlying at a much lower cost. And last of all, I think it's not listed here, but as you all know, 10-cent shares are listed on the SGX. And if you are actually keen to gain access to global indices like the S&P, Nikkei 225, the Hang Seng Index, and even the Hang Seng Tech Index. Warrants have Macquarie has warrants over these underlines, and that's why you can actually trade it, gain access to all these names on the SGX. Okay, so I'll hand it over to Conhal to share his views, and after that, I'm going to teach you on the new tools that we're very excited to introduce and how you can find the right warrant for yourself. Okay, Conhal, please. Conhal, you're on mute. Sorry.
Okay, for those that just joined us, so me and Darren were taking turns. So now, I'm going to talk about the market outlook right now. Yeah, let me just share my PowerPoint. Now, so earlier I shared about the precision entry on the, for example, like this. Okay. Now, so this is exactly what I have encountered last Friday. As of last Friday closing, I spotted an opportunity in the Hang Seng Tech Index. So now, who is Hang Seng Tech Index here? Is that now I want to point out to you that earlier we had discussed about forming an investment or trading strategy. Is this now? First, we have to identify where's the trend right now. Now, so Hang Seng Tech Index, who is Hang Seng Tech Index? It is a new index itself where it measured the 30 largest technology company listed in Hong Kong. So I would say that it's a tech index for Asia market. Of course, most of the companies are China. Now, China is moving the whole industry by a new generation right now today, as we could see. Now, so Nasdaq, the tech company in the West, but I would say that so far the Hong Kong Tech Index measure the tech company in the East here right now. Now, of course, if you ask me about this index itself, my view is that in the long term, it's the uptrend. But however, just now I shared with you the trading strategy. Can we not short in a uptrend? The answer is yes, we can short in an uptrend, but we have to keep the short term because we are going against the trend. Now, so it was produced in a video that I have a project with Macquarie Bank that every month I will produce a video. So that's live, and it's not after market talk here. Is that last Friday closing I spotted an opportunity here. Now, so in the talk show that I have Macquarie, I focus a lot about don't just go for ordinary bearish engulfing body or inverted hammer. Go with those that carry high weighting. Okay, so later I introduce how do you see those that carry high weighting. Now, so as of last Friday closing, which was last Friday closing of the tech companies around in China, in Hong Kong, that you could see there's a bearish engulfing body. Now, so after that, on coming Monday, I produced a video with Macquarie. I say that it's time to sell the technology stock. Of course, it's only at the beginning of this week we started to see the retracement quite deep around the world for the tech company. But the market, if you understand that, usually they will give us some early indication. That market already showed me last Friday, showed the market last Friday that it's a bit destabilized. Maybe there's some short-term opportunity on the downside. Okay. Now, so these are the top 6 constituents on the Hang Seng Tech stocks. Now, this is what you can do. Like, for example, some of you were, because this topic I want to be very focused, it's not just short-term, but on the structural warrant itself. Now, you may ask me, so Conhal, when should we apply leverage or gearing and when should we not? Now, I would usually apply leverage when it comes to trading. Why? Because it's this. Now, let me just give you one point to take note here is that the greater the confidence at the point in time, that means as of last Friday closing, coming Monday, I have to make a view. The greater the confidence I have, that means I believe that the last Friday top, which is here, it should not break above. I have a view that it may come down in the short term. I would like to do a short position. So therefore, I would like to engage myself in a buy put and strong warrant. Now you may ask me, so what are the gearing I should go for? Now my pointer that I can let you take back home is this: the greater your analysis, the greater the confidence at the point in time, the higher gearing I would like to deploy. It means that the greater the confidence that my confidence that in time to come, very soon, the market will come down. Then you may ask me, how confident are you? I say maybe about 75 to 80%. I'm quite sure that it will not break or retest the last Friday high. I really wanted to gather whatever instrument out there that I can participate in this short on the short term view. Then you can consider the buy put in the structural warrant. That's what I do. Now, the greater the confidence on your analysis, the greater leverage or gearing that you can consider to deploy. So that's my point for you. Okay, so after that, what happened the last Friday, and that was captured on Wednesday itself, this past Wednesday, and Thursday, Friday it continued to sink. So well, Darren said that this is a benchmark. So I talked about the benchmark. Then Darren just now talked about in the different structural warrant, there's this gearing effect. So it's a multiplier effect. He will discuss with you more on that later on in a while. Okay. So now I'm just going to move on to the other part. When if you say that on the downtrend, earlier I talked about the uptrend, the strategy. On the downtrend is just inversed. You just inverse. Okay. So that means on the short you try to keep it longer, but on the buy you try to keep it shorter. That's about it. Now, okay, so my segment here is that I'm supposed to talk about three markets. Now, if you ask me about, I selected these three: the U.S. market, S&P or the Dow Jones, the Hang Seng Tech Index, and STI. Now, I'm just going to cover one by one right now. Now, the first one, if you ask me about the U.S. market, I would say that the U.S. market currently it is um, the trend is uptrend. Now, all of them is the uptrend, but the risk is relatively high and the volatility also very high. Now, when the risk is high, I will try to be very cautious. I do not want to get myself to buy something and it got stuck because the risk is very high. When I say volatility is high, it also means that maybe the short-term opportunity is always there when volatility is high. But we have to take note that the Dow Jones, the US market, at the moment is on the uptrend. Now, when I say uptrend, a point of entry, we have to understand. Now, you have to bear in mind that this slide on Wednesday itself. Thursday and Friday, the market have turned. Now, so when you say the uptrend, you also have to identify the whole uptrend. Where are we right now? Are we at the beginning of the uptrend? I think that we are maybe at the end of the uptrend for the US market. I'm going to share with you a slide in a short while. Okay. Now, so this is a 110 years old slides measuring the US market. Now, a lot of I'm very concerned. Some of my very good friends they say that Conhao, don't worry. When I'm buying the US stocks, it will sure go up, and that really worries me. I say, why do you have to say so? Why do you say so that the market will sure go up? You say, don't worry. Although I'm stuck now, one day surely it will still bounce back up because the last 100 years in the US history, the stock history, it has been always going up. Is it true? No, not really quite true. Okay, the US market only performed its uptrend over the last 41 years, since 1980, as you could see here. Now, if you start investing in 2010, 1910, all the way to 1980, it's still stuck at 2005. For the last 70 years before 1980, the market was doing a range-bound market. Only in 1980, the market started to trend up. Now, the next thing I'm going to share with you is that every market there is a cycle. Every market there's a cycle. It got me really excited here right now is that now after the World War, after the Great Depression, we have World War. Now you see that the whole cycle lasted for 45 years, and the correction, deserving correction is about at least about 50 or 70%. That's called correction. So the 2008 is not really a deep correction, it's about just close to 50%. Now, then this current cycle that we're in right now is spanned over the last 41 years. So therefore, if you ask me about my view moving forward for the US market, earlier the first segment I talked a lot about, remember the three strategy. The first strategy is that we have to identify. Number two, if it's uptrend, we look for retracement to buy. And number three, we also look for a point of entry, a biting point of entry. So we discussed about these three strategies. So if you ask me about US market, is it still uptrend? I would say so. Now, so you may ask me what happened to last Thursday and Friday. I would say that you have to identify what's the difference in the uptrend. Market taking a breather and market is heading for a potential reversal. It's a two different matter. So I think our view as market is still taking a breather, the US market. Whether it will develop to a potential long-term downtrend, I think it's too early to tell. I need the next few weeks or next few many periods to observe the market. If the market will speak to us, okay. So that's my experience over the last 25 years. So like what I say, where's the US market right now? I felt that the US market is throughout the whole trend, the last 41 years, US market is about here. So I am very cost me the risk. I find the US market risk is very high. I will not invest too much in the US market, but I will prefer to trade because the difference is that when invest, usually I will not take, I only look at the market maybe once a month. That means I'm not very close to it. But when I trade the market, I'll be always on my toes. I will look at it every day or at least once few other days. Once the market start to turn, I will try to exit myself as fast as I can. So that is the difference. Now, how about Hang Seng Index? Now, Hang Seng Index, I felt that the Hang Seng Tech Index specifically, the trend is still uptrend because I think in Asia, there's a transition between the west to the east, especially the tech stock. It's still an uptrend. Risk is moderate, volatility is high. It means that I think there's still more upside to go in the near and far future. Volatility, yes, there's always trading opportunity around the Hang Seng Tech Index. Now, so where I would like to put the position for Hang Seng Tech Index right now is about here. And the last week, from Monday, Tuesday, Friday, Thursday, Monday, I skip one day. Monday, Tuesday, Wednesday, Thursday, Friday, you see that the down move is now doing its retracement. Yes, I do a market call that it's time to short the Hang Seng Tech Index on the uptrend market is for short-term view. Now, the next few days, I may consider take profit and may also consider to get into a buy position if opportunity surface. So you can see that. Now, again, I just want to repeat myself here is that three strategy in getting into a market, whether you're a long-term investor or short-term trader, is this. Identify the trend, look for retracement, and number three, look for that biting point, which is you can deploy those hammer or engulfing body with high weighting. Now, how about, and that's what we saw, but it's not inverse hammer. We saw a bearish engulfing body in the Hang Seng Tech Index that was last Friday. As of last Friday closing, that chart I demonstrated it was a daily chart. Now, how about STI? And that's what we saw. Yeah, just now we discussed about that. That was last Friday, bearish engulfing body. Then after that, on Monday, Tuesday, Wednesday, Thursday, and Friday, it sank down further for the Hang Seng Tech Stock Index. Okay, so you can imagine if you buy put with multiply with the gearing effect, the yield is much more. I think that one Darren may explain to you on that part later on. Now let's turn our attention to STI right now. And STI is something that a lot of even Singaporean investors that they fail to understand. I felt that STI, I love STI. Now I've been working with Singapore Exchange since I think about even as early as 2011, partnering with them. But I never strongly advocate to buy and hold Singapore market for long term. But something have shifted, something have changed over since last year. I start to advocate on SGX behalf that to the investor outside Singapore that even Singapore investor here is that it's time to buy Singapore, accumulate them and hold for long term. But in between, they will have some short term trading opportunity as well. Why? Why Singapore as a long term investment here is that the trend is a pending uptrend. I would say pending uptrend. Risk is low, volatility is moderate. Yeah, so means that I'm not too concerned about this huge downside risk. Yes, there will be downside risk, but not too concerned about there's a huge downside risk. Volatility is moderate. From once a while, they will have some trading opportunity around. Now, let me share with you the next slide. And where exactly Singapore in the long-term market, where is Singapore positioning right now? I felt that Singapore is here. Now, let's look at this slides. I don't have time to explain to you further, but later I'll share with you a video I produced with one of the, together with a broker in Hong Kong. They asked me last year, July, so what happened in Singapore? They could see a lot of fund that is buying into the Singapore market. That was last year, July. So now I just want to bring you to Singapore market over the last 25 years, since 1995 until year 2021. You could see that that was during the Asia Tiger time. Okay, that was one stage, the old one stage, the last period, the last era that we were in. Now the peak was here and it formed a support here. I call stages and level. And the new stages here that we have, and most of us remember that it was a very boring period that I received a lot of email from or feedback from investors in local Singapore market say that Singapore market is so boring. Not exactly. If you understand how to maneuver Singapore market, there's within this whole last 10 years, there's 3 cycle or 4 cycle. Each cycle lasts for about 3 to 4 years. You can see that 1, 2, 3 cycle. So it means that near to about 3005, you have to determine to take profit. Coming close about 2005, you start to accumulate them. So that's how you manage Singapore market. But moving forward, I think Singapore has changed, and I'm positioning myself for Singapore market, my portfolio for long-term hold. Long-term hold. Why? Now, I just want to freeze this picture, or if you could screenshot that. Okay. Now, this market is very similar to the US market before 1980. Now, look at here, stages, level and stages. Then after that, something fundamentally have changed. Now, what have changed in Singapore is this. From a old economy that we have mostly banking and property sector that we have and many other old economy, but we are transiting to a high tech company basket of companies very soon. Now, if you could look at the EDP website that I have researched upon, that was last year numbers that I have in November. It says that 100 world class tech company in the world, 80 of them, and that was last year number, that 80 of them already have a footprint in Singapore. That means out of the all these 100 reputable tech companies in the world, 80 of them have chosen Singapore to be either their regional headquarters or headquarters in Asia. And that means a lot to me that we are transiting from an old economy to a new economy. And you understand what set a major trend in this new era is high tech. And we are up the game. Okay. Now, look at this, okay, the pattern, and look at what happened to the US market, the pattern as well. Stages, level, stages, and what caused the US market to transit from this range market to a trend market. It was the US dollars in 1980. It started in 1971, and it took about 10 years for the world to recognize that in 1980 they became the world reserve currency. And that matters a lot. Okay. Now we can discuss more about that during Q&A. And with that, I just want you to look at, I've no time to explain to you this, but basically what I'm trying to portray to you here is that use technical analysis, even for long term and short term, I use them all the while, but also include behavioral finance. Now, I have this market analysis structure here is that I use TA, but I also include BA. BA means that behavioral finance. Now, what is behavior analysis is this? 2005, I this chart I freeze it in May because that's my view back then in May 2020, and I call for buy in Singapore. Now, why am I so firm with 2005 as a support to about 2002? Because of this resistant line in form in year 2000, the tech bubble, and also in the Asia boom in the 1995 and 1997. That's why at a point in time in May last year, I'm very firm and advocate that 2000 Singapore will support between about 2002 to 2005. Okay, so how to identify the behavior analysis is this. It must always come with emotion. Back then, the peak was dot-com bubble. There's a lot of emotion tied to it. And back then in 2002, the former peak is today's support. You have to understand in a growing market. The former peak is today's support in a growing market. It means that in 1997, 1995, Asia Tiger, the peak was at 2002. There's a lot of emotion tied to it. That's called behavior analysis. Now, when you type TA and BA together, it's very powerful to give us that precision entry point. Okay, so I just want to keep it very short. Now, the other one that um, you may ask me, say, Conal, if you find that the US market is heading down, then why would I advocate a buy for Singapore? Because I felt that the downside risk for Singapore market will be quite muted. So the US market may fall, say for example, but the magnitude of the fall for Singapore market will be not as much as the US market. Okay, because remember the period of the trend. Where are we right now today? I think we're at the beginning stage. So last year November, one of the Hong Kong broker invited me to share because they observed that in July, something very interesting there was in July, they observed that there's a lot of institutional investors start to um, um, invest in the Singapore market. Yeah, so they asked me that, Conrad, do you understand why we're observing here is a broker in Hong Kong, and you could see that the environment over there that through Hong Kong they are investing into Singapore. That was last year July. The pandemic is still very hot. They asked me, do you have a topic that you can explain to us why to our institutional investor why uh, Singapore is a buy? I say definitely I have a proposition here. Okay, so now that was March, April. You could see that there's a bullish engulfing body So November was here. I felt that this bullish engulfing body have set a trend. Okay, on behavioral analysis, that there was a lot of fear, and at the point in time in March, April, it's still very uncertain. but confidence was there as well. So how do I analyze behavior analysis is that when the market is still very uncertain, why the market have moved up? So that speaks to me a lot. So after March, April, I'm quite firm that maybe support has been met for Singapore market. And that was my November presentation with them. So one of the Hong Kong broker invited me to share with 300 of their institutional investor span across 39 countries. And after that, that month itself, it gave me this another bullish engulfing body. And you could see that the market has moved up. And just go back, realize where the whole trend, the whole market cycle, where is Singapore today? And look at the intermediate opportunity that we have on the weekly chart. And not just that, and you could see that there's now have already formed this double bottom. So moving forward, I'm quite certain that Singapore base have met. Yeah, I'm gonna finish about here. Um, I'm moving quite fast because the time is very limited. Maybe you can ask me more questions during our Q&A. If you're really keen to find out about my conviction for Singapore market for the next 30 years, this is the topic that I did with one of the Hong Kong broker. Like what I say, they have about 300 institutional investors have attended from 39 countries. I've recorded down, and the title is called "A Lion That Roars in a Time of Uncertainty." I talk about Singapore market that I never spoke too much of it in the last 10 years, but moving forward, I'm just going to highlight to investor, look at Singapore for long-term investing. You can screen, screenshot this slides, or can go to the QR code to attend this webinar for free. Now, the next one, if you want to really get hold of how to understand to get into the precision entry, so this is the program that you can consider as well. It's called Timing the Market, Invest and Trade with Greater Accuracy. So in this webinar that I explained about combining the two, which is the TA and BA, that will give us the precision entry that most of us are looking at, precision entry, or the other one is called the biting point. How do I create the biting point? And it applies to all, whether you're income investor, value investor, or growth investor, or even short-term trader. So you can consider this program. Just for this program, I've marked down as a discounted 20% discount, which I hardly give any discount for this program. So up to Monday 12 noon, you can consider. Okay. So with that, I'll pass this time to Darren. Then we'll go over the Q&A later on.
Okay, thank you, Konghao. Yep. So I think everyone knows a bit more about the current bullish trends, particularly in the SPX, Hang Seng Tech, and STI. So for warrants wise, I'll just quickly jump right into the projected performance because I think we all know that over the past week it has actually been falling off quite aggressively, especially for the Hang Seng Tech, which comprises of many big Chinese tech names. So suppose we actually adopt a bullish view in the Hang Seng Tech in the coming week from a correction in the huge drop. So we can actually use one of the new tools and see how you can actually see your gross estimated returns for you on warrants. So for example, this tool over here is one of the new tools that we've actually launched. So you see this is the Hang Seng Tech index over here with the last price around 9,500 as of yesterday's 4:30 close. So suppose you have a target price of 10% increase in maybe the next 4 weeks. So all you need to do is to have your target price over here and include your holding period of 4 weeks. And from there, you can actually see how much your warrants will actually gain over a period of time. And one interesting thing, if you notice, you see that if let's say over here, if in the same day, the Hang Seng Tech gains 10%, your warrants will gain up to 290%, but that's within the same day. But of course, if let's say you have a view of over 4 weeks, so you can see how it will increase. The return over 4 weeks is 85% increase over 4 weeks. And this is the reason why you see that your returns actually falls over time is because of the gearing. It's because of the holding cost, where it for warrants it's actually called time decay. Some of you may be familiar with it because as with all listed leverage products, this thing called the holding cost. But for warrants, the holding cost is considered over time. and that's why it's called time decay. And you can use this tool to actually factor and manage the time decay and see how your warrants perform over time. Next up is the S&P. Same thing, because we also have a bullish view according to what was covered earlier. So if you feel that the current price of the S&P will increase by 10%, and you maybe for S&P, you plan to have a longer view over 8 weeks. So same thing, you key in your target price of 10%. If you plan to hold it for 8 weeks, which is around 2 months, let's see, the tool will show you that in 8 weeks' time, your warrant will increase by 97.5%. And all this is an effect of, because it's due to the gearing effect. So again, as we mentioned, gearing, what it does is it magnifies your returns. And another way of using gearing is that it also allows investors to find out how much to invest. Because over here, when it comes to warrants are cheaper compared to the underlying shares or index. So let's take for example of a gearing of around 10 times. All you need to do to figure out how much you want to spend to get the same exposure, let's say you want an exposure in around 50,000 worth of the shares. Simply take the 50,000 divided by a 10 times gearing. So this means you need a 5,000 investment in warrants. And because if you see the warrants over here is cost around 10 cents, it means that you will purchase 50,000 units of warrant A. So here is just some of the trending warrants that we have covered today, because over the S&P, the HSTECH, as well as the STI. Okay, so now when it comes to warrants, how do you actually select them? Because sometimes you notice that there are many warrants over just one single underlying, like the Hang Seng. There's so many warrants, and this is because it's to cater to investors of different types of risk profile, their trading profile, their risk appetite. And usually there's a lot of steps to actually choose, I wouldn't say a lot, but 5 steps to select the one that actually suits your investment profile. But right now, because due to the time constraint today, I'm not able to cover the full steps. But because now we are actually happy to introduce the new tools, all these steps to select the right warrant is actually done by the computations, which we have covered earlier in the Warrant Selector over here. Okay, because over here, let's just go do a quick recap. Simply, when it comes to warrant trading, you always need to have a view. So all you need to do in the left corner over here, which is to select the underlying that you're interested. So let's say you're interested in the new Hang Seng Tech warrants. So you just select Hang Seng Tech, and after that, you have the view. You adjust the it based on your view. So your view will include your target price, how much you think your warrant would be, will increase to or decrease to. Maybe you're bullish or bearish. And next is to base off your holding period. And after that, you'll see all the warrants, the trending warrants listed over here in the table below. And there's also other tools that, because today I'm not able to share them with you, but don't worry, because right now I'll be actually sharing with you not just some of the things that are coming up, but also that we're going to have a in-depth warrant seminar coming up next week. So before I carry on, maybe all of you can also take out your phones and use take a picture of the QR code so that you can actually subscribe to or register for these webinars and the things coming up. Okay, so first of all, the first thing that I'll cover is the Hang Seng Tech warrants. They're newly listed last July in Hong Kong, and we're very happy that right now we have gotten the approval, and we have just started listing the Hang Seng Tech warrants on the SGX this week. And it was just in time because it allows investors to actually capitalize on the downside moves, especially for the whole week, most of the whole week. Okay, so to find out more about the Hang Seng Tech Index, what it is, and how to trade these warrants, you can actually scan the QR code over here. Okay, the next QR code would be the webinar I've mentioned about. So it covers the 3 key tools when it comes to warrant trading that we have actually tried to narrow down and actually make it as concise as possible, so investors will know how to will know where to go on our website and start warrant trading very quickly and very easily. So it'll be this Thursday at 6:30 to 7:30 p.m. Okay, hope you have caught the QR code. Okay, And next up is also by investing note. So this event you've signed up with, you will also learn that there is a simulation contest after this event. And because of the contest, the top traders will be rewarded with a prize money. But also, but more importantly, is to actually gain the chance to trade products that you have not traded before, such as structured warrants. So you can use structured warrants, and especially with the highest level of gearing among listed leverage products, this will probably help you attain larger returns and maybe win one of the top three prizes. Okay, and also just to keep in touch with us, you can find us on Facebook, Telegram, and YouTube, where we share all the latest and breaking market updates. Like in this case, when there's a trading halt, we share with our investors. Maybe when it comes to this week mid trading hours, during the when Hong Kong confirmed that they are going to implement a stock trading duty hike, we actually publish it to our investors right away. And this is on our Telegram, so you receive it like WhatsApp to get updated with what's happening in the market. And for YouTube, you see a familiar face over here. This is Conhao. So this is what we have talked about, where we actually work together to produce all these educational videos. And this is the latest one where we cover the FTI and HSTECH. And as you can see, from this week moves, Conhao's views were spot on. And yeah, so you can actually visit our YouTube channel, keep in touch, and also read up on his views. So yes, I'll thank you all for the very rushed session, but hopefully you all managed to capture the QR codes so that we can keep in touch, and also you can find out more about how to start warrant trading. And right now, I'll just go straight into the Q&A. So let me. Okay, so I think the first question is for Conhao, which is based on the assessment of next trend of the US stock market, and based on your method, Conhao, do you think it will continue uptrend, sideways, or starting to go down from here? I believe you've covered some of it just now, but maybe you could maybe further expound on your view to actually talk about shorting the US market or in the short term, or maybe going on the long term buy. Maybe you could explain more on that.
Chris, I want to thank you for the question. I think there's a few parts to it. First of all, you have to understand for the US market, don't believe in the statement where over the last 100 years, US market has been going up and it will always go up. No, every market is a cycle. So as we stand into the two cycle over the last 80 years, you could see the first cycle was 45 years and now we're entering to 41 years. So it's a time bomb that nobody knows. But I think the one thing that we should take a look at fundamentally is the yield. That a lot of people are talking about the yield, and I think there's a lot of misunderstanding about the yield. They say yield is also because the economy is picking up. Yes, it's true, but it's also because of the weakening of the US dollars to the lot of printing of US dollars. It caused the inflation to pick up. So therefore, there's an urgency for the yield or the interest rate to increase as well. And this is not too healthy for the US as a whole. Yeah. So now, if you ask me, um, I'm not exactly sure the timing as of now, but we just have to keep track because I believe that what we're seeing over last Thursday and Friday in US market is kind of give me a thumbs up for a shorting opportunity in some weeks to come. Okay? But whether the weeks will continue to progress into a major reversal, that one I would not know. But the market will demonstrate to us whether that means my view is that for the next few days to the next few weeks, it may progress to a market taking a breather in an uptrend market. Now, whether this market taking a breather, whether it will continue its uptrend, the market will speak to us subsequently. It will bounce up. If it bounce up, means that it's going to continue its uptrend, which is, I think, likely the case will be because earlier I said my view for the US market is the uptrend, but the risk is high because of this fundamental analysis that I just spoke about, but the volatility is also high. So do take note that yes, market is taking a breather, but whether this breather is going to be short term, that you will bounce back to its uptrend, likely will be the case, or because of certain black swan event or as a market progress or gray rhino event, it may turn into a major downtrend, and that's also slightly possible as well. So we got to keep track of the market. So I'm not a fortune teller, so I cannot tell you. But as of now, for the next few weeks, I think the market will be under pressure. So therefore, you can consider structural warrant is one of the derivatives that I'll always look at. So the key is always this: at the point of time at this analysis, what is my confidence? If my confidence is strong, I will I will engage derivative gearing product. Okay, that maybe we can take on the
Okay.
next question. Yeah.
Yep. Thanks, Kon Hao. Okay, so I think there's two questions that I can combine together into one because they're quite similar. So first is, what's the fundamental difference between warrants and options? That's a very good question because I think a lot of people who are following the markets have heard about options. And as for the second question, which is where can you find warrants code and info on the SGX app? Okay, so first of all, as for the first question, what's the difference between warrants and options? So why I say it's a good question, because they are very similar and even structured very similarly in terms of the terms. Okay, but one key difference is that options may be traded on a stock exchange or over the counter. But for structured warrants in Singapore, they're exclusively listed and traded on an exchange. And the reason why is because on the exchange, there is a market maker lists all these warrants to ensure there's liquidity, as I mentioned earlier, and to provide continuous warrant buy and sell prices. So you all can investors such as yourself can enter and exit the warrant positions easily. And also, because they're listed on SGX, you are able to trade all these structured warrants on your local brokerage accounts, just like how you trade shares. Right. And so how do you spot all these warrants? Because they're just like shares, you will log in into your local brokerage like Philip, Poems, iTrade by CIMB, OCBC, IOCBC, Fund Supermart. All these brokerages, you can go in straight to them and key in the warrant code. So I just take a quick picture. Just let me share my screen very quickly. And to give you an example of how you find the warrants. So all of you can see all these trending warrants I shown you all today. So this is the warrant full name, but all you need to do is to find a unique warrant code, which is the 4-digit number over here, key in into your brokerage platform, and you'll trade them just like how you trade shares. Okay, so I've answered that question. Okay, so one question for Kon Hao. Singapore may have attracted a high number of high tech because of its a regional HQ, but they are not listed. And Singapore is still a bank and property market. So how do we get exposure to growth sector in Singapore?
Yeah, I think a very good question. I know you're going to ask that. We can see that currently the listing not many tech stock, but bear in mind that my proposition on that delivery is for overseas investor to invest in Singapore. So I asked them that don't wait until the tech stocks be listed in the Singapore
Sorry, Kon
market. Then you
Hao, I
start.
think your voice got actually cut off.
Yeah. Testing. Can you hear me? Testing. 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 1, 2, 3.
Yes,
Yeah, can hear me, right?
yes,
Yeah.
loud
Okay.
and clear.
Okay, good, good. Yeah, so what happened here is that now you have to understand that it will take some time. And you also understand that for STI or benchmark in Singapore, we have to recognize that the benchmark will not always be the same. That means the 30 or 24 constituents will not be always the same. From time to time, the benchmark companies will reshuffle, will include tech stock in the company as well. So that's what I'm seeing here is that in time to come. In fact, I have some friends that work in the business where they are company secretary. I say during this season, how do you see the company in Singapore? You say a lot of company close shop, but we also see a lot of new companies opening up. I say, who are they? They say that they are usually all these high tech company from overseas. When they put their footprint here in Singapore, they also brought in their own vendors as well. So they work with local vendors in high tech company, but they also bring in their own vendors from overseas to Singapore as well. So what I'm seeing here is that in time to come, they will, as the vendors grow bigger, they will also seek listing as well. So you don't wait until that things became hot, then you go and buy. But then you have to pay the price. We were gonna start investing right now. We gotta start educating ourselves how to understand the Singapore market, whether is it for long-term investing or for short-term trading, what are the instrument that's available, do study into them. Okay? Don't wait until when the markets become hot. By then again, it's very pricey. And just want to leave that note before you go is that remember the STI, the constituents will change from time to time. Okay? Don't wait until it became very pricey. So with that, maybe if I have time for one or two more questions.
Yeah, okay, so I think we'll cut off at 2:55. So I think we'll end over there. And just to wrap up, before we both get cut off, Juanha and I really thank you all for tuning in. And also the questions have been really good, educational, not just for answering the person, but also I think for most people, especially with what Juanha's latest question on the new, how to get yourself prepared before new listings take over the Singapore market. So once again, thank you. And for other questions, you can join us on our panel interview later at 5 p.m.
Okay, I'm just going to share my QR code if I have the time. These are my QR code. You can visit, you can sign up for this program. The offer will last until Monday, 12 noon. Okay, and this is the other one where you can understand more about the Singapore market. This is the one. Okay, so do look at this topic, a lion that roars in a time of uncertainty, where spoke about what Singapore futures for the next 30 years to the overseas investor. And this is something that I think I would like you to acquire the skill on how to time the market with greater precision. Thank you so much.
Thank you very much, Konhao, and thank you very much, Darren. I'm sure many of you can't wait to try trading some warrants on Monday, but if you have any more questions for the two of them, they will be back for the 5 p.m. session later. So don't forget to join us then at 5 p.m. Konhao and Darren will be back with us. Also, we'd like to remind you that there is $5,000 cash up for grabs in the simulated trading competition. Don't miss out on that. You definitely want to sign up for that. It's free to sign up. It only runs from next Monday to Friday, and then who knows? You might be one of our winners. There's lots of prizes available. There's over $10,000 in cash up for grabs. Top prize is 5K, so you don't want to miss out on that. Our next two sessions are at 3 p.m. We'll have Alvin Chow, Dr. Wealth himself, talking about how to improve your stock picks with factor investing. And on the Mandarin side, Contact Pro Capital's Vinny Liu, 他会谈投资进化论、价值趋势投资，请按在网页上端的选项前往下一个节目，或者按 schedule 也可以往下一个节目。Please click on the button at the top of the page or on the schedule button to head to your next preferred session. Thank you very much, everyone.